class. Hello my dear friends. Today I'm Shraddha Rawat and today we are going to learn something amazing, extraordinary, exam theory. Yes, you are right, trading. So my course name is The Bible of Complete Stock Market, Basic to Advanced Level by PhD Investment Trader. The author name is Nandan Singh Rawat. You can find this book on Kindle, Kobo, Amazon and Flipkart. So what are you waiting for? You go ahead and buy this book. Till that time, I'm getting ready for my class. So what are you waiting on? Get, set, go! Okay, so I have just opened my screen. I hope you can see. So we are just continuing our class chapter 3 price action. Yesterday, one second. Okay, just let me grab my pen. Okay, so yesterday we learned. Yesterday, for a little bit recap, I'm just teaching and nothing so. What happened? I don't know what is happening. Just give me 1 second, guys, everybody. I hope it works well. Okay, it's working well. So today we don't need any ink pen, I guess. Yes. I said erase. Okay. Yeah. Chapter 3 Price Action, as you know. So we learn price defined 2 types: fundamental analyst and technical analyst. Fundamental analysis of price action we learned. There are basically 5 main categories. One is economic factors and second is, oh, what is happening with this now? Please. Okay, economic factors we learned. There are basically 5 points we have learned, and in second, company specific factors. We learned these also have 5 parts, so you can just see in my previous classes. And today we are gonna learn the point 3, market sentiment and investor behavior. What are we gonna learn? Market sentiment and investor behavior. So let's start with the class. Let's go ahead. Stock market depend on investor emotion and perception. I don't know what happened, guys. Oh, what happened now, yaar? I am really sorry if you are getting disturbed. I know as well as me is getting disturbed of this thing. If I get from the Epic pen, it will be more easy for me, but okay. Now it's not working in this also. Okay, no worries. Let's start with this pen. Stock prices depend on investor emotions and perception. So it says that stock prices depends on investors and emotions only. And perception. We'll learn what is perception, even though I don't know. Supply and demand. More buyers push price up, while more sellers cause declines. What does supply and demand means? They mean that there are more buyers and they push up. First is confirmed that buyers push is up and means bullish, and our sellers push down, bearish. Just learn these two words, bullish and bearish. Just learn this word. If I say B, if I say BB, it means BB means bullish. This is an easy way. Bullish and buyer. But if I say SB, so it will mean seller and bearish. Just learn this format. You will learn that what is if there is a buyer, it will go up, not down. If there is seller, it will always go down, not up. More buyers push prices up, while more sellers causes declines. I hope you understand this much. Now, market speculation. Investor expectations and speculation can lead to rapid price changes. What does a market speculation means? Investor expect. What does they think? What does they predict and speculate can lead to rapid price action. As I told that 90% of market runs into psychology. Okay, and the third point is technical analysis and trends. What does they mean? Price patterns, moving averages and indicators influence buying and selling. What does a technical analyst means? A technical analyst means price patterns. Right now I have not taught you that how many patterns are there. There are many patterns. Okay, we can't count. There are many patterns to learn. Like there are bar. You can find these one, Renko chart. Okay, there are so many there are so many charts and all that we have to discuss. But not in this chapter. I think so in chapter 4. Or it could be 5 also, or it could be 6 also, till 6th or 5th or 4th till the end. Okay, so I hope you understand what does this means, that price patterns, moving averages and indicators influence buying and selling. Now our fourth point is that fear and greed. Panic selling lowers prices, while investors' excitement rolls up, pushes them higher. What does fear and greed means? Means panic, very much panic. Panic means we shout in the louder way, like when someone is splashed into the a river and everyone is shocked, and some of them are shouting that, oh my god, help them, right? So we are all making loud noises, we are making noises, we are making panics and all. So, and selling lower prices. And now in fear and greed means panic selling. There are more lower prices while investors are happy. While investors are joyful, excitement. They get wild from the excitement. Pushes them higher. What does they push them? They pushes them higher. Now I can't see anything from this black page. So let me just erase it all. It's on this screen and nothing. Okay. Now here we can go through with the external and global factors. Now what they do mean? We'll learn what they mean, that events outside the stock market can impact stock prices. Events, maybe like there are some of the Trump putting, what do we say? There are many events, like some of them are elections. There are so many elections, votings, and there are so many occasions all over the world. Some of them are like wars, like right now the wars are going from Iran's and Israel's, right? So the impact also proof in the share market. Understand, like events, the special occasions, events outside the stock market can impact the stock prices. Geopolitical events. Now there are maximum how many? One second, let me just erase again. Okay. Now there are how many points to learn? 1, 2, 3, 4. There are 4 points that are like geopolitical events. Like wars, as I told you, wars, trade conflicts. Yes, trade conflicts also, and political instabilities create market uncertainty. And there are some natural disasters also, like COVID-19, tsunamis, famine and floods and all, right? And storms, so on, like natural disaster and pandemics also. Yes, and pandemics, like events like earthquakes or COVID-19, tsunamis, floods, famine and all disrupt in industries and stock prices. Commodity prices, rising oil, gold or other commodity prices affect company costs and profits. Like nowadays gas, shortage of gas. We need gas in every house, right? There are some of this commodity prices, and some of them are like gold, silver. Many times it happens in a year. And I have to guess. currency exchange rate is a strong or weak currency packs multinational companies earnings. So on. So these are the big things that we have to learn. Just let me erase. So these are the all things in the geopolitical. It could be tsunami, flood, it could be like wars in geopolitical. It could be wars, trade conflicts, and political instabilities, and a strong currency exchange rate, a strong or weak currency impacts. And it could be like natural disasters, pandemics like earthquakes, floods, tsunamis, and all. Okay, so I hope you understand this much. So let's move on to the next page. If it erases first. My God. Okay, now let's move on forward. Let me just have my arrow to push up. Okay, now we have the fifth one. Now we have our fifth, yes. Now we have our fifth one. Market and industry specific factors. These influence stock prices in particular sectors like industry performance. Some industries, tech, healthcare, growth faster in strong economics, while others, utilities, consumers, could do well in downturn. So I hope you understand this much because it's easy. Government regulations, yes, government regulation, new laws, taxes, policies can help or hurt companies and their stock prices. So how many price action have, how much type price action have? One is line chart, second is bar chart, and third is candlestick chart. So how many charts are there in price action? There are basically three charts. One is a line chart, second is bar chart, third is candlestick chart, so on. 1 second everybody, just hold for a second. हेलो चाची, आप पापा के फोन में कॉल सकते हो? मैं भी वो क्लास ले रही हूँ ना. हाँ. Sorry for the interruption everybody. I am really sorry. So there are basically three types. One is line chart, second is bar chart, and third is candlestick chart. Now let's move ahead. Now we have line chart. A line chart will only learn line chart today, and from tomorrow we'll learn bar chart and candlestick chart. Right now we are only learning little bit. We are only learning bit of it, and tomorrow we will learn deep line chart. In brief, we'll learn line chart. Brief, we will learn bar chart and candlestick chart. Today I am telling you a summary. A line chart is drawn based on closing prices, and it mainly used for a long time frame. Okay. Advantage. There are two advantages. Simple and easy to read and understand. Okay. Second one is helps identify long term price direction, that if it is going like here, so it helps us to that identify that if it is a long term or a short term. Now there are disadvantages also. There are two. Does not show opening high or low prices. Can't display patterns like candlestick or bars. So here you can see you can see this frame given below. This is the line C. This is a line chart. It doesn't showing if it is going like, yes, it is showing that if it's bullish, so it is showing bearish, yes, but it can't show the candlesticks properly. It can't show the candlesticks properly. Like if it this much small candle is red, so okay, if this much big is green, if no wick or with wick, so it will show like this in the candlesticks, but it is only showing the line chart that if it is bullish or bearish or okay. So yes, thank you for today everybody. So we'll just close up because yes, now it is a little bit more time. If anybody have any of the doubts, please query me from my number. I can give you my number 83296216647. It is easy to check in comments if it is open. So I asked to my dad to please open. Okay, I'll ask to my parents. And I want you to understand what I'm understanding. When I teach you, it feels me like that I'm revising my own things also. Okay, I'm revising my own things also. And yes, so yes, if you want to learn more things, like and subscribe to my channel. And yes, if you want to learn, like if you are from the 6th class, if you want to learn, or 5th class, I can guys, if you want to learn any English stuffs from me, so from Monday I will also teach the chapters from the NCERT books. Okay, there are two things that I will teach you. One, this course right now I'm teaching the Bible of Complete Stock Market. The whole book, whatever I'm teaching, this is given in this book. Okay, so here what are we learning? We are learning, there are so many parts. Chapter 1, we learn history of technical analysts. So here is like Oni Shahoma, Japanese rice trader. So whatever I teach you is in this book. So that's why my course name is the Bible of Complete Stock Market. If you want, if you want to learn my NCERT books also, if you want to learn English from NCERT book to class 5th to class 6th, I will teach you from Monday. So yes, it will be alternate days. One day to the Bible of Stock Market and one day to English course. So yes, thank you everybody. I guess it was a wonderful day with Price and Action chapter 3. We'll learn candlesticks and bar chart tomorrow. So how many types are there in price action? Yes, you are right. 3. How many? Can you just tell me the names? Line chart. Yes, bar chart. 3. Candlesticks. Bravo. So bye bye and see you soon.